Welcome back, everyone. This is Miles Per Hour, and I want you to take what I say with a grain of salt, as this is not financial advice. But that being said, I'm going to be going over 3 stocks today that I'm looking to share with you guys that you can invest in during this market dip. And as you guys know, I tend to have a more risk tolerance when it comes to these kind of stock picks, as I love to see huge gains. But please understand the volatility and risks associated with these kinds of stocks. And by the way, if you're new here, please be sure to drop a like, subscribe, and hit that notification bell so that you can see more videos like this once they release. I still have a small channel, but honestly, thank you for all the subscribers, guys. I appreciate all my current subscribers, and I always have you guys in mind when it comes to my thoughts and opinions when it comes to these stocks that I mention. So please share your thoughts and let's get into this. Now, I understand a lot of money has been moving out of these big tech and growth stocks lately and tends to be moving towards more of these safe reopening kind of stocks. That's because a lot of these people want to transfer their assets to things that are a little more safe and less volatile in this overvalued market. But just because people are doing this doesn't exactly mean that you should. During this massive dip, I haven't sold a single share of any of my stocks, and I plan on actually doubling down. Just within the last few weeks, we've seen a huge drop in the market, not in just tech, but a lot of more other speculative stocks, including SPACs, that still have a lot to prove. However, while these speculative companies seem like risky investments right now, in fact, I think this huge correction is what was needed to bring a lot of these stocks down to reasonable valuations. In cases like this, I really urge you to ask yourself if you could see these beaten down companies being able to grow their revenue and exceed past this dip in the next 3 to 5 years, because that's how you should look at the situation, at least if you're a long-term investor like me. And if you really believe in the company you're invested in, dips like this should just be positive. It should be seen as a massive buying opportunity. So without further ado, let's get right into this. The first stock I'm going to be talking about is one I've already mentioned. It's SFTW, which is the SPAC merger Black Sky. This is the stock that I went over in one of my previous videos that you guys can check out. Essentially, you can think of them as the Palantir of space. They use data analytics, AI, and satellites to monitor real-time events going on around the globe. You can kind of see them as a very high-tech surveillance company that will primarily be used by government agencies. Honestly, this is a company that is coming out with extremely cutting-edge technology, particularly in surveillance, and I have no doubt that Cathie Wood will eventually be picking up some shares of this stock in her ARKX space ETF. I honestly cannot tolerate how bullish I am on this company. They are very futuristic and are leading the way into a world that will potentially be for the greater good of mankind through hyper-advanced security and defense systems. Alright, stock number 2 on this list is a stock called QuantumScape, ticker QS. Now, this is a stock that has been beaten down really heavily from highs of $133 back in December 2020. In short, they are a company that is seeking to create the next generation solid-state lithium-ion battery for electric vehicles. Their goal is to produce cheaper, high performance, and less vulnerability to heating when it comes to these battery packs. In fact, in 2012, they actually managed to form a partnership with Volkswagen, who invested $300 million in their startup. And as you know, EV battery technology is really complicated. So there's lots of moving components required to actually bring something like this to the commercial value. But when shares plummeted by 60% from the high, and I quote, "with a trajectory resembling a free fall," said investorplace.com, an investor group filed a class action suit against the company. Which honestly, I'm not really going to go too much into this. You guys can read up on it for yourself, but to me, it's honestly just a bunch of noise. But that moving aside, if there is one downside to this company, they are not expecting to release their technology to be commercially available until 2024. And this is honestly looking at it from a really optimistic point of view, considering all the delays we've seen from more established companies like Tesla. And actually going back to that lawsuit filed against QuantumScape, in an interview, the founder of QuantumScape and CEO Jagdeep Singh said the company did not represent its technology. He said, "The Seeking Alpha story has no merit. It reads like it was written by someone who didn't know anything about batteries." He's passionate and that his approach using a ceramic solid-state separator will succeed while others have failed. So it's kind of cool that the CEO is just lashing out and coming out as a really confident guy. Much respect. And finally, the last company I want to share with you guys is Skill. So, what is Skills, or ticker symbol SKLZ? Skills is a third-party platform that allows developers to create their own games on it. Users then get to play these games essentially and have the option to gamble real money on the stake of each round. Kind of like a handheld gamble casino at your fingertips. So you get the chance to win money that's on the line. This is an app that I've actually personally never tried out, but I should honestly look into considering it because it actually sounds pretty interesting. And considering its user engagement is also pretty impressive too. Look at this. According to recent statistics, games played on average about an hour per person. And this is so far. However, this is a company that needs to encourage new game developers to come on board, as roughly 80% of revenue from the third quarter of 2020 came from only 3 games. So on the downside, the fact that the vast majority of the revenue is stemming from just these 3 games, which you know is risky for these games for whatever reason. If they die out or maybe people lose interest, they need to start collecting a new curation of games. However, Skills recently acquired a deal with the NFL, which is hugely massive, because essentially what this means is more funding, better publicity, and essentially more hit games in the future for more cash flow. Honestly guys, the more people that decide to come to this platform, this will only contribute to their revenue. This is even another sector that Cathie Wood is extremely bullish on, the online gaming and gambling industry, which seems more and more niche now, but I think something like this, give it another 5 to 10 years, is going to explode and be incredibly common. Well, that's about it guys. Thanks for listening, and until next time.